Welcome to the Deep Dive, your shortcut to being well informed. Today is Wednesday, July 30th, 2025. And Wall Street is holding its collective breath today. All eyes are really fixed on a crucial Federal Reserve announcement that's due out this afternoon. Our mission today is simple. Cut through the noise, pull out the most important bits of info, maybe some surprising facts so you can really get why markets are, well, on pins and needles and what it means for you.
That's right. I mean, if you just glance at the market right now, the major indices, they're trading relatively flat. We're seeing maybe some modest gains over in the tech sector, but overall, you can really feel this sense of caution. Everyone's just waiting for clarity, clarity on the central bank's future path for interest rates. What signals are they going to send? It really just underscores the huge influence the Fed has on pretty much everything, stock prices, mortgage rates, you name it.
Okay, so let's try and unpack this. The situation the Fed finds itself in, it's complex. They're trying to read the economic tea leaves, and honestly, those leaves are looking pretty messy right now.
Yeah.
On one hand, we just got that Q2 GDP reading, stronger than expected, came in at a pretty robust 3% annualized rate. Sounds great, right?
Yeah, on the surface.
But here's where it gets, well, really interesting. That growth, it follows a contraction in the first quarter of the year. So it's like the economy took a step back, then maybe lunged forward. It's not exactly a clear, steady growth story.
Yeah.
Makes their job much harder.
Absolutely. And what's fascinating here is how the Fed is going to interpret these kinds of mixed signals. You've got that GDP rebound, which, okay, positive. But then you also have inflation, specifically the PCE price index, the personal consumption expenditures index. That's the Fed's preferred gauge, remember?
Yeah.
And it's still stubbornly above their 2% target. It's just persistent.
Just hanging around.
Yeah, and at the same time, if you connect this to the bigger picture, we're seeing more and more signs of a slowing labor market. So think about that mix. Decent growth number, but inflation's still too high, and a job market maybe starting to weaken. That puts the Fed in a genuinely tough position. I mean, their dual mandate, maximum employment, price stability. How do you hit both when the data is pulling in different directions? It's a delicate balancing act, to say the least.
Okay, so given all that complexity, all that messiness, the overwhelming expectation today for anyone watching the markets is actually no rate change.
Right. That's the consensus.
The market consensus, and it's backed up by the CME Group's FedWatch tool, which, for anyone unfamiliar, basically tracks market probabilities for rate changes using futures trading. It's indicating something like a greater than 97% probability that the FOMC, the Federal Open Market Committee, will just hold the federal funds rate steady, keep it in its current range, 4.25% to 4.50%. So the decision itself, pretty much a foregone conclusion, almost entirely priced in already.
Indeed. And that high probability, it just reflects how deeply analysts and traders have already factored in the current economic landscape, plus everything the Fed has said before. So yeah, the decision to hold rates steady, it's largely baked in,
Right.
which naturally shifts the real focus away from the what, will they change rates, and much more towards the how they communicate their thinking, their outlook, their next steps. That's the key.
Exactly. So what does this actually mean for you listening? Well, the real focus, what truly matters for investors, for anyone just keeping an eye on their finances, it isn't the rate decision itself. Not really. It's the tone and the forward guidance, the stuff that will be in the policy statement that drops at 2:00 p.m. Eastern, and then maybe even more crucially, what Chair Jerome Powell says in his press conference right after. That's where the nuance is. That's where the real market-moving insights are going to be found.
And this raises, the big question for everyone watching.
Right.
What kind of tone are we expecting? There are basically two main possibilities, and they have very different implications for the market. On one side, you could get a hawkish tone.
Okay.
That would mean they really emphasize the ongoing fight against inflation. They'd be signaling, hey, we're in no hurry to cut rates. Getting inflation back to 2% is priority number one. If that happens, it could definitely temper some of the market optimism we've seen. You might see growth stocks pull back a bit, for example, because borrowing costs are expected to stay higher for longer.
Makes sense.
Or
the alternative.
Or we could see a more dovish tone. That would mean the Fed puts more emphasis on the slowing economic momentum, maybe highlights any developing weakness in the labor market. A dovish tone signals, a greater willingness to consider rate cuts later this year, maybe even sooner than people think if things weaken further. If we get that, it would likely give markets a nice boost, especially those interest rate sensitive sectors like housing or tech.
So it really comes down to how they frame things, how they weigh those competing goals.
Absolutely. It's all about how they frame the current situation and what their outlook sounds like. And, even a slight shift in Powell's statement, like the order he mentions things in maybe putting full employment before price stability this time, that could quietly signal a strategic pivot. A subtle shift that could change the investing landscape way before any actual rate cut is announced. It's really quite remarkable how much weight rests on just a few carefully chosen words.
Wow. Okay. And there's another layer here too, isn't there? Something about dissent.
Yeah, exactly. If we connect this to an even bigger picture, it's not just about hawkish or dovish in the statement. There's another fascinating element to watch for, though it's somewhat rare: potential dissent among the Fed governors themselves. Usually these votes are unanimous, or maybe one person disagrees occasionally. That
Yeah.
signals a united front. But there's some speculation out there, specifically that Governors Christopher Waller and Michelle Bowman, they might actually vote against holding rates steady.
Really? What would they want? A cut?
They might prefer a rate cut now, believing maybe it's needed to get ahead of any further economic slowing, or perhaps they think inflation has come down enough already to warrant easing policy a bit.
Huh. That would be, well, that would be a significant event, wouldn't it? A split vote like that.
Oh, absolutely.
Especially if those two governors vote for a cut. It would really highlight a growing division within the Fed itself about the right way forward.
Mm.
It signals that even inside the central bank, there isn't a clear consensus, which, could add a whole new layer of uncertainty for markets. What kind of signal does that send?
Exactly. It's almost unbelievable how a single dissenting vote can become such a major headline, but it truly reflects those internal tensions. Are we more worried about inflation staying high or about growth slowing down too much?
The split would be highly scrutinized then.
Definitely. It reveals those internal debates that the market doesn't usually get such a clear view of. It would show that different members are weighing the data differently, maybe some leaning more towards recession fears, others still focused on inflation persistence. And that signal in itself can move market sentiment as traders try to figure out what it means for future policy. It just adds another layer of complexity.
Okay, while we're waiting for that Fed drama to unfold later, let's take a quick snapshot of what's actually moving in the market today, beyond all the Fed speculation. We're seeing some pretty incredible gains in certain spots. Newegg Commerce, this ticker NGG, is just soaring, up almost 40% today.
Wow.
Yeah. Then there's XPro Group Holdings, XPRO. That's jumped over 30%. Looks like a pretty significant volume, too. Sanmina Corporation, SENM, trading higher by over 23%. And Commvault Systems, CVLT, has seen a jump of nearly 19%. So some seriously strong moves for those specific companies today. A lot of investor interest there.
And, on the flip side, we've also seen some pretty notable drops. Novo Nordisk, NVO, for instance, is down significantly, over 21% today, and on really high trading volume, so lots of selling there. Herc Holdings, HRI, has fallen around 17%. Let's see, Exelixis, XEL, trading lower by about 16.5%, and Whirlpool, WHR, down about 14%. So yeah, substantial pullbacks too, suggest some specific headwinds or maybe company news hitting those names hard today.
Right, it's not just the Fed influencing everything, but it's not just about the biggest winners and losers either. There are other interesting movements happening. We're seeing some stocks kind of outbreaking either on high volume or because of specific catalysts.
Yeah.
Open Door Technologies, Open and SoFi Technologies, SoFi, for example, exceptionally high trading volume around those today, indicates a lot of investor interest, a lot of activity in those names. These are companies that, often capture attention because they're growth stories or maybe shifts happening in their industries.
And beyond that, you've got analysts highlighting some potential breakout picks. Companies like Latravenues Technology, that's Iadro, Vimta Labs, and Rallis India, Rallison. They're being called out for potential breakouts. Usually that's because of strong technical chart patterns. It means their stock price movements are showing patterns that suggest maybe some upward momentum building up. Catches the eye of traders who follow that kind of technical analysis.
Interesting. And of course, earnings season is still rolling. We always have the earnings movers. Companies reporting their quarterly results, seeing big swings based on that. Humana, HEM, for instance, is up about 6% today. Looks like they boosted their outlook.
That's a positive sign.
Yeah, definitely positive signal for them and maybe their sector. Often indicates strong business performance or, optimistic projections for the future. And LXP Industrial Trust, LXP, that one's also active after putting out its second quarter results. So it just shows how individual company performance continues to drive significant market action. even on a big Fed day like today. These moves are direct responses to, actual financial numbers and future guidance. Okay, so we talked about the Fed's messy picture, the hawkish, dovish possibilities, potential dissent, specific stocks flying or falling. What does all of this actually mean for you? Why should you care about these nuances? It's about more than just, watching the financial news ticker. How do you translate these signals?
Well, look, understanding these kinds of nuanced market signals and trying to get inside the Federal Reserve's thinking, it gives you really crucial insights. Insights into broader economic trends, sure, but also into what the market expects to happen next. For instance, if Chair Powell comes out sounding hawkish, really focused on inflation, you might expect continued pressure on mortgage rates. Makes buying a home potentially more expensive, right?
Yeah.
On the other hand, if we get that dovish pivot, signaling maybe lower rates are on the horizon, that could potentially boost your investment portfolio, especially if you hold growth stocks. Or maybe make refinancing that mortgage more attractive down the line. If you run a small business, it could directly impact your borrowing costs if you're looking to expand. If you're retired, it hits the yield on your savings or your fixed income stuff.
Right.
So just knowing what Chair Powell emphasizes, inflation control versus supporting growth, that tells you a lot about the likely direction for the economy for interest rates over the next few months. And that directly impacts your personal financial decisions.
Exactly. It's really about connecting those dots. When you understand why the Fed is in what we called a tough position, or why just a subtle shift in Powell's language could move markets by billions,
Yeah.
you're not just consuming news anymore. You're gaining a valuable framework, a way to interpret what comes next. And that helps you anticipate how these big economic forces might ripple down and impact your own financial future, your mortgage, your savings, your 401k, whatever it is. You're not just a spectator anymore. You're sort of an informed participant, understanding the currents shaping things.
So just to sum up, while the market pretty much fully expects no actual rate action today, the Federal Reserve's message, that tone, that forward guidance from Chair Powell, that's going to be the real determinant. That's what shapes market expectations for the rest of the year. And right now, many are anticipating that the first potential rate cut could actually come as early as the September meeting. How the Fed communicates today will heavily influence whether the market keeps thinking September or maybe pushes that expectation back or even pulls it forward.
Right. So as you watch the headlines later today, maybe consider this. What's really fascinating here is just how much weight rests on nuanced language, on subtle signals coming from the Fed. Chair Powell's choice of words, maybe even the presence of just one dissenting vote, how that can ripple through global markets and ultimately influence our economic path for months ahead. Kind of raises an important question, doesn't it? How much of our economic future is actually written in the subtext of these very carefully crafted statements versus how much is driven by the big, bold economic numbers themselves? Something to think about.